LionsDenFX.com. Gold price rebounds above $1,820 amidst dollar consolidation. In this comprehensive update, we dissect the recent dynamics of the gold market as it climbs back from 7-month lows, reaching above $1,820. The US dollar, after a corrective dip from an 11-month high, is now consolidating, setting the stage for potential changes in gold's trajectory. We also dive into the cautious optimism prevailing in Asian markets, against the backdrop of mixed developments in the Chinese property market. Notably, Sunic China Holdings Limited secures approval for a debt restructuring plan, while China Evergrande Group experiences a significant drop, impacting Asian indices with one exception: Hong Kong's Hang Seng, which rallies by 2%. Oil price declines and a temporary halt in the U.S. Treasury bond yield surge provide some comfort to investors. However, the looming U.S. non-farm payrolls (NFP) data release keeps them from making major directional moves in both gold and the U.S. dollar. Economists anticipate the addition of 170,000 jobs to the U.S. economy in September, a slight slowdown from August's 180,000. The unemployment rate is expected to decrease marginally from 3.8% to 3.7%, while average hourly earnings are projected to rise by 4.3% YoY, maintaining the previous rate. The disappointing ADP report, which revealed only 89,000 private job additions in September, raises concerns about the NFP figures. A weaker NFP report could impact November rate hike expectations by the U.S. Federal Reserve, Fed, given the loosening labor market conditions. Depending on the NFP outcome, we may see the US dollar either strengthen or weaken, affecting gold's recovery attempts. A downbeat NFP report could drive the US dollar lower, supporting gold's ascent towards $1,850 and beyond. Conversely, a stronger labor market report could bolster the US dollar, potentially hindering gold's progress. Technical analysis reveals that the next move for gold heavily relies on the NFP results. The daily setup presents mixed signals, with a bear cross on the Relative Strength Index (RSI), countering oversold conditions. Additionally, the 100 Daily Moving Average (DMA) crossed the 200 DMA from above, confirming a bearish trend. Should the recovery persist, gold buyers will target the $1,850 level, considering the formidable resistance near $1,830. Further upward potential could challenge the September 28 and 29 highs of $1,880. On the flip side, gold must find support below the critical level of $1,810, aligned with the March 8 low. A breach of the $1,800 threshold may open doors to a drop towards the psychological level of $1,750. Market insights: Dollar index, Euro, Aussie, Pound, and more. The dollar index and euro are on a path toward 106,105.90 and 1.061.0650, respectively, before we anticipate a pause or reversal. Meanwhile, the Aussie and Pound may see a temporary upward trend, targeting levels around 0.640.6420 and 1.22, with the potential for a reversal in the near future. Euro JPY is expected to range within 155,158, while USD JPY may rise, provided it stays above the crucial support at 148. Keep an eye on USD RUB, which could pause around 100 and may dip to 99.98 before an eventual move towards 102.50 in the longer term. EUR/NAR is currently ascending, but our overall view remains bearish below 88, while USD INR is projected to trade within 83.30, 2583.1000 for the time being. All eyes are on the U.S. non-farm payrolls (NFP) data for potential market shifts. The U.S. Treasury yields are presently stable but may require further declines to enter a correction phase before resuming their ascent. The upcoming U.S. NFP data release will be a critical determinant for the direction of yields. In contrast, German yields have dipped, yet support levels are expected to limit the downside and maintain the upward trend. Additionally, the 10-year and 5-year GOI have returned to their established ranges, making the outcome of the RBI's monetary policy decision a pivotal event. Looking at stock markets, the Dow Jones has a mixed immediate outlook, while the DAX index appears vulnerable to a decline towards 14,800. Nifty needs to surpass 19,600 to rekindle bullish sentiment, and the Nikkei index may have room to rise towards 31,500 while holding above support at 30,500. In the realm of commodities, crude prices continue to dip below support levels, potentially facing further declines. Gold and silver maintain a bearish outlook for the near term, and copper could breach the 3.55 mark, descending towards 3.50. On the other hand, natural gas has surged, with the potential to test 3.25–3.30 before a corrective pullback materializes. Keep a close watch on commodity price action, as the US NFP data release may introduce heightened volatility to the market. Stay informed with our comprehensive analysis as we navigate the ever-evolving financial landscape. Thanks for watching. Please like and subscribe. LionsDenFX.com